Good morning. This is Dylan Jovine behind the markets. Happy Thursday. Today's Thursday, April 16th. And one thing that has changed a lot since I started working on Wall Street 35 years ago has been the staggering drop in IPOs. Basically, and I have some notes here, since the late 1990s, the number of publicly traded companies has dropped by 50%. There were twice as many publicly traded companies when I started in the business in the early 90s than there are right now. So IPOs have really plummeted, and the companies that haven't, they've been acquired and a lot of merging. So you see a lot of concentration to where now you have 5,000 companies, 6,000 companies that are publicly traded, where in the early 90s, it was around 14,000. In the late 90s, it was about 12, 13,000. So we've seen the number of public companies go down by 50%. And there's a couple reasons for this. One of them is, the big one is that founders and executives basically that I talk to, they're saying, look, the juice ain't worth the squeeze. The risks outweigh the rewards. Litigation is a big one, and really it came about with the Sarbanes-Oxley Act after Enron and WorldCom, where they put such onerous regulations on these companies that even if a company makes an honest mistake, they can get sued big time. And it actually becomes, and we've seen over the years, even a stock drop, even a price of a stock drops, and you get what we call a stock drop lawsuit, which are these meritless lawsuits that just as these trial lawyers go after, and go after these companies. They extract these massive settlements just from a stock dropping. It's really unbelievable. So these companies are kind of facing a double whammy. A company accused, rightly or wrongly, of making a false statement is going to face a direct fraud charge, basically a lawsuit over underlying conduct. But also the double whammy is that when the stock drops because of that claim, they can get sued for the stock dropping in and of itself. So basically, the company pays twice for the same alleged wrong, irrespective of whether either claim was proven or not, actually, on its own merits. So basically, these have become nuisances. That's been bad news for the public markets. And frankly, it's probably increased the valuation of many companies. There are fewer places to go with your money. So you start to see these outrageous valuations in publicly traded stocks. So that's a negative. On the positive side, it's created some real opportunities, especially in the private markets, which is actually why we started Hidden Market Profits. We really saw that there were massive opportunities in companies that were not public, but could be on the path to go public or get acquired. And we've been very, very active in that area for sure. So you got to find these companies that really have a few big secrets. One of them is I like experienced managers. I always think to myself, I don't want to hand the keys to the car to somebody who doesn't know how to drive it. That's a big deal for me. Somebody who understands the battlefield of the industry they're in and how to solve a big problem for their customers. So experienced executives, companies that have traction, that really already are selling things, very, very important, and a company that has kind of anchor investors. And one of the good ones that we've seen recently, we talked about it with Hidden Market Profits. If you're a Hidden Market Profits subscriber, check it out. It's a defense contract. It reminds me very much of a kind of Palantir. They already have contracts with the Space Force and the Air Force. And these guys are basically doing software. And if you actually study what happened in Iran, believe it or not, even in 30 days, we hit more targets in Iran than we did during the 2003 Gulf War. Shock and awe. And it was all basically because software or AI or machine language is picking targets and automatically just pop, 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 taking these places out so fast and so violently that we've run out of ammunition, apparently, according to some reports. That's how fast and hard we hit them. So it's interesting. The pace of war is really increasing. That's another thing that we talk about here a lot. Success in war is all about speed. So our military, thanks to then Secretary Jim Mattis, has really focused on shifting our attention away from fighting wars like we did in the 20th century to 21st century warfare. And there are a handful of companies that are really helping us pioneer that. And this private company that could be public, in the 90s, this company could have been public, but it is not public right now. This private company that we feature in Hidden Market Profits is an example of that, and we're really excited about it. So Hidden Market Profit members, I urge you to check out our report on this wonderful company. Anyway, that's all I have today. I will speak to you tomorrow.